Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of November the 21st, 2016. Now, what we can expect next week is probably a very choppy week with the US Thanksgiving. Of course, we've already had Thanksgiving in Canada here. We've gone past that, pretty uneventful. But in the US, usually it's a very volatile trading week. So let's get started here, see where we're at. Now, what I can first assess here with the dollar index is I believe we're going to put a short-term top in place very soon, probably, but I'm not going to say probably, potentially on Monday or Tuesday of this coming week. We can see our VantagePoint indicators here, our predicted medium-term difference crossing over our long-term predicted difference, our short-term predicted difference and strength indicator pointing down. Now, our predicted MACD is still very strong here, guys, but the predicted RSI at 88.9, we are moving into heavily overbought territory. Now, because we're overbought, that doesn't mean we're going to have a trend reversal on the US dollar. I don't believe we're going to have that. What we're going to have potentially, though, is a very strong corrective move down. As we get closer to December, the rate hike, the dollar will regain its ground and will likely be king again going into the year end. But right now, we are definitely getting overbought. Now, a lot of times what the central bankers do here, guys, what they'll do is they'll artificially knock a strong currency down in anticipation that it's inevitably going to move higher. So when the dollar does pull back, that's a buying opportunity for us. And looking at going into the December rate hike, once again, fully supports the US dollar. Now, with Trump in the presidency, everything for now is going. I can't say it's going good or it's going bad. The guy hasn't even taken office yet, so I don't know what the outcome of this is going to be here. I've heard rumblings about executive orders, and he's potentially looking at undoing the Iran nuclear deal. That could be a big problem. There's a number of things on the horizon. So once again, with these currencies, nothing goes straight up and nothing goes straight down. And we do still have that Trump wild card there where I'm not really sure what's going to happen. I think we should really be more concerned about this in 2017, and for now just ride the dollar wave. The equities are supported by this for now, but I'm going to talk about that more in a minute. So for next week, we've got three key areas here: 100.89, 100.03, and of course 99.19. I would anticipate a full retracement back down to this level or very close to it, and then the buyers are going to come right back in. So what potentially we could be looking at here is a weaker US dollar to Wednesday or Thursday of next week, and then a reversal at the end of the week. So keep an eye on that. If the dollar goes lower here, guys, the S&P will likely follow it. That means the market is getting spooked right across the board, or the market's correcting. Now, the S&P 500 has been sitting up just below this 2200 mark for what feels like forever. Like literally, guys, since the summer. We're in a tight channel here. You can see this big sell-off after the market realized that Trump is going to get elected, but then all of a sudden they realized, well, the Republicans are getting elected too. That's a positive for the equity markets, particularly some of the financials, so they pour right back in. So but we've come right back to where we already were. There is no new trend here, guys. The VantagePoint, the triple EMA cross is good, but 2151 is on the downside. We've closed the week at 2180, still carrying a bullish tone, but once again, just like the dollar index, we can see right here our medium-term predicted difference crossing over our long-term predicted difference, telling us that the medium-term trend is weakening. The long-term trend may still be in place to the upside, but on a short and medium-term basis, the bias is clearly to the downside here, guys. Our predicted RSI, 73.4. We're not overbought yet. Our predicted MACD is not overbought either. Everything looks okay there. So we could push higher here, even in this mildly overbought condition. But I think that if the dollar moves lower, the equities are likely to follow. And one of the main culprits that I find with this, guys, is the DAX 30. If it sells off, you can see we're in a heavy congested resistance area up here. The Nikkei breakout. Now, a lot of people don't understand what caused the dollar yen breakout to the upside that I talked about last week. I'll talk about more of the dollar yen in a minute. But specifically what I had talked about here, guys, is the fact that we broke above the Brexit high point, and more importantly, as the Nikkei broke higher, money was going out of the Japanese yen into the Nikkei stock market. So if the money comes back out of that, the dollar yen will sink. So we need to be watching that very closely. Now, the bounce that I talked about here on light sweet crude oil, that did come to fruition. We can see that we held this area down here in this just under this 43 level that I talked about. We got a big bounce, but now we're all tangled up in the VantagePoint 18-day predicted EMA at 46.52. So right now we need a sustained break of 46.52, but if the dollar moves lower, equities move lower, oil doesn't stand a chance here, guys. So we have to be very, very cautious. We don't have a confirmed buy signal on oil just yet. It's looking better, but it's still not looking great. You can see that 4 days in a row we have banged up against this VantagePoint 18-day predicted EMA. Every one of those days is a fantastic short, but buying on the dip based around their predicted lows has been a good trade also. But right now, 46.52, that's the area you want to watch. We need to close above this area at least 2 days in a row to take the pressure off the downside. Now, as we come into gold, I've talked about this on gold. If the dollar has a corrective move, gold will have a corrective move. Now, the critical vantage point level on gold, and this could, much like what I talked about last week here, guys, I warned everybody last week that gold had broken that trend line, and to start the week, Euro US doesn't stand a chance. It's going lower. And again, the intermarket correlation there is absolutely critical in our trading. When we look at this now, our gold's key level 1249, we've closed very bearish on the week at 1208. Very good short trade last week on both Euro US and gold. But if gold does bounce on a corrective dollar move, then the euro will find a bottom here very soon. Probably, potentially, I hate to use that word probably, I'm going to use the word potentially, down around the 105.10, 105.20 area. Watch for a corrective move. Our 18-day predicted EMA now comes in at the critical 108.35, but our 3-day comes in at 106.27. So we're going to look for this area. If this area holds to start the beginning of the week, we could see further downside into Tuesday onto that 105.19 area, but then we're likely going to see potentially see a bounce. We've got 107.20 on the 8-day. These are all critical pivot areas of resistance right now. So when we lose the first one, that will confirm that the dollar is likely going to go lower into Thanksgiving weekend on a corrective basis only, as the Fed gets ready to start raising rates in December, which we anticipate they will. So our indicators, again, we can see our medium-term trend is starting to weaken here. We are grossly oversold here. 10.4 on the predicted RSI. We can see that there's a good thing here, an area here that we can connect the dots to when the same thing happened. And this was just a corrective move in the broader downtrend. So it does give us a week or two of buying euro. That could come to fruition. But again, I think with that rate hike pending, it's ultimately the euro is going to fall after we correct back towards that 108 area. US Swiss franc here, same thing, guys. We've got a big move up. When the dollar index moves lower, everybody trading Forex next week, you want to watch that dollar index very closely. If it comes under pressure, US Swiss franc will immediately come under pressure also. Our critical level there, 99.14. I am absolutely anticipating a corrective move back down to this level where we'll be buyers. So I'm hoping we can get down here, actually, guys, so we can step in and buy here. If we look at this on the 6-month time frame, you can see that we're breaking out above that 98 level, the Brexit part here. I'll just take this out here so everybody can see that a little clearer. That Brexit bar, you can see we've had a nice triple EMA cross on that break. Right up, we can thank Mr. Trump for that one too, because that's been a great trade with myself and my own direct clients that I've been advising to buy US Swiss franc and dollars for weeks now, even prior to the Trump win. Because even if Hillary got in, it still probably for the most part would have been US dollar positive. It was basically a win-win scenario here for the dollar, whether you get Trump or Hillary, and you've got that pending rate hike. So for now, we want to look for a corrective move lower before we get too excited about further longs. Now, when I look at Great Britain US, you can see that basically we've been banging up against this VantagePoint 18-day predicted moving average that I talked about last week. And I said basically we would be long about while we hold above 124. 124 held all four trading days here, guys, and then on Friday it sold off. Now, in most cases, whatever the market does on Friday, it does the exact opposite on Monday. So keep this in mind. Right now, we've got a failure on the predicted MACD at the 0 line. Our predicted RSI suggests that we could be getting ready for a bigger move to the downside. Now, one of the things that will drive pound dollar lower is not just US dollar strength here, guys, and this is once again something I discuss with my own direct clients in training, is that the high correlation to Euro Great Britain. So if the Euro rises, that will actually potentially put further downward pressure on Great Britain US. It could, because if Euro Great Britain strengthens back to the upside, then that's going to put some downward pressure on the British pound. So the British pound is really caught between the euro and the US dollar for its direction. So right now it is carrying a bearish tone, but remember, we only broke that VantagePoint 18-day predicted EMA on Friday in thin illiquid markets, okay? Now, as we get into the dollar yen, the first thing I want to point out here, guys, from last week's trading, I told everybody prior to the market opening last week that the very second that we break above 107.20, 107.40, we buy immediately. This is our Brexit high. We have been in this long range since all the way back here into June of 2016. This range is held both on the upside and the downside for this entire period of time. We can see now we've approached a massive swing high right here that's right around the 111 mark. If the dollar yen is going to move lower, the S&P 500, the Nikkei, they must move lower to drive the dollar yen pair lower. The dollar index must move lower. All of these will put downward pressure on the dollar yen pair. Now, when we look at our indicators here, once again, guys, very much concerning to me here that our medium-term trend, even though we've had this big move up right here, our medium-term trend has crossed over our medium-term predicted difference, has crossed over our long-term predicted difference to the downside. It's telling me that the medium-term trend is absolutely weakening here. So dollar yen is a funny pair. It doesn't necessarily mean it is going to go lower, but when I look at the additional indicators here, our predicted RSI 88.9, we can see these past corrective moves here off of these swing highs right here. You can see that it doesn't necessarily last for very long, maybe 4, 5, 6 7 trading days, but whenever the RSI has got into this particular area, it has led to a corrective move, if nothing else, in that direction. So right now we have surpassed that area. So I would be anticipating that the dollar yen is going to pause and move down. So shorting this off this 111.20 area to begin the week potentially could be a reasonable trade. Keep your stops around 112. Don't hold on to this thing for too long, because if we do clear this swing high, guys, there isn't a whole lot left up here. If I go back to 1 year ago, you can see that we have staggered areas, but if we can get through 112, potentially we could be on our way back up to the 120, up to that all-important yearly opening price. So be very careful of that. But right now, I prefer my buying opportunities down here around between 108.63 and 106.85. That key VantagePoint 18-day predicted EMA, the further we move away from it, guys, the more likely it is we're going to retrace to it. So you always want to know what this number is. Keep a very close eye on it. But for now, to start the week, the first couple of days, 106.85 is absolutely critical. If we lose our 3-day, we can see it's all color coded at 110. That's the first indication we're going lower. Then we have to deal with this 108.65, which is this blue line right here. So we're watching these staggered levels of support for a potential buying opportunity. Okay, so we'll watch it closely, but right now my optimism on further upside on this particular pair remains heavily guarded. Now, With the US-Canadian pair, once again, we continue to push higher on this pair, but we're starting to see that we're running out of steam a little bit here, guys. Our predicted short, medium, and long-term differences are still in good shape here. This is going to be an oil-driven trade. Now, if the US dollar tanks across the board, that doesn't mean that US Canada is going lower. If oil prices go lower, the US dollar will still make gains against its Canadian counterpart, because that will likely also signal the Canadian dollar will be weak right across the board. Okay, so when I look at this, our predicted MACD, we're moving into slightly overbought territory there, but our predicted RSI at 64 is saying we have further upside. We had two fantastic tests of the 18-day predicted moving average this week here, down around this 134.22 area. Now, at the beginning of the week, I basically told you guys of last week's Forex Weekly Outlook ahead of the market, not behind the market, before the market even opens. Same as this video this week. You've got this video before the market opens. Last week I said, look, we're long while above 133.65, that key VantagePoint 18-day predicted EMA. We follow it all week. We had two fantastic buying opportunities here as it came down to that area and then bounced out of there very strong by almost 200 pips. So we could see a corrective move right now. It's potentially, we have a top in place, short-term top in place just below 136. So watch that area very closely. But this 18-day predicted EMA, most of the indicators from VantagePoint are saying we are still likely going higher. Now, with Aussie US and New Zealand US, I've talked extensively about this with my own direct clients going into next week's trading. We're coming back to the Brexit low here. Now, the Brexit low is still in play on Aussie US and New Zealand US. You can see that that's this critical, absolutely critical level down here about the 73 level. Our indicators are becoming oversold. Our predicted RSI, once again here, guys, 13.8. I am not at all an advocate of trading off of oversold conditions, but I'm not an advocate of continuing with the trend if I see the market down here. The VantagePoint predicted RSI is a very useful indicator because it doesn't stay in that condition for very long. A stochastic, it can stay in overbought or oversold conditions for weeks, sometimes months, but an RSI is not the same. It reacts more exponentially to market conditions. So right now, with that Brexit low, if we are going to bounce on this thing, it's probably going to be between 72.50 and 73. Often what happens here is the market will push below this Brexit low and try and set up what's called a bear trap. And a bear trap means that they're going to push this below here, make it look like it's going into a very strong trending move to the downside, and then it just completely reverses to the upside. Be very, very careful of this. We are getting warning indicators here from VantagePoint now that this thing potentially could be getting ready to turn. So watch this area again between the 72.50 and the 73 level. If it starts turning around, the dollar sells off across the board, this will be a good long trade. So will New Zealand US. You can see New Zealand US, same thing basically. We're coming into the exact type of area, but a little different signal we're seeing here on our medium-term predicted difference right here. It's actually flattening out in moderately oversold territory, and it's gone flat, the medium-term predicted difference. Now, the long-term predicted difference still pointing lower. Predicted MACD suggesting we still could see some more downside, but once again, 19.8 on the predicted RSI. We are definitely moving to oversold condition here. And again, I want to make sure that I'm not advocating for trading off an oversold condition. But if our additional indicators from VantagePoint start to warm up to that idea, our medium-term predicted difference crosses our long-term, then we do want to look at starting to buy. But we have to have a signal here to do so. Right now, I think we're getting close to a buy signal. But it's just not there yet. So next week, again, we have a holiday short week. We are going to see choppy, volatile markets. The dollar likely not to hold its gains going into Thanksgiving. But again, we have to watch it very, very closely.